Good afternoon, everybody, and welcome to this afternoon's webinar presentation. Today, we're looking at something that some of you may be feeling is a bit esoteric or soft, but I am increasingly convinced that it is key in evaluating the outlook for not just the retailers, but for the South African economy as a whole. In essence, economic growth relies on growth in population, productivity, and hours worked. We're going to look at the first part of this today as we break down how South Africa's demographics will play out, the generational change currently underway, and how you can use this information to structure your investment portfolio for the best outcome. Please take a minute to read through the disclaimer. Just a reminder that I'm not giving you investment advice today, but rather information that will help you make sound investment decisions. There is a copy of the slide pack available for you to download and keep. You are welcome to use any information in it. Just please source it to us and the underlying sources if you do. I will be pausing regularly to answer questions. Please type them into the question box below and I will get to them. So here is the roadmap of our presentation today. We'll start off with looking more closely at why you need to keep tabs on demographics. Then we'll take a quick look at who Generation Z is, both globally, and unpack some of the particular nuances that are relevant in South Africa. Next, we'll spend some time looking at how the related population movements and generational change will affect the retailers. Then finally, we'll finish up with looking at how the retailers are positioned and which ones are the best and worst off. Okay, so why is this important? Firstly, if you're going to invest in companies based on their underlying fundamentals, there is simply nothing more fundamental than the people who buy those products. By spending time looking at population shifts, you'll be able to identify which retailers' customer bases are growing and which are declining. You'll know what the demographic time bombs are well ahead of time, and so be able to avoid them and even profit from them. It's truly key to understand how spending power will evolve over time, and knowing the number of people in the workforce and how this will morph over time is your starting point. Lastly, it's key to understand how household formation will develop over time. There are certain categories that we consume as individuals, especially clothing, but food and durables are mostly consumed as households. And while economic factors also play a role in determining when young people leave home and set up on their own, the actual number of people is also important. So why am I fixating on Generation Z? Here is the very simple answer. By 2030, Generation Z will be the single largest segment of South African adults, and the millennials and Generation Z combined will be pretty much 70% of adults. This has some truly important implications, given how these generations' core beliefs about consumption are radically different to what we've seen since the 1960s, when the baby boomers first came of age. This slide shows you the stark differences between the four generations' global view of consumption. For the baby boomers, consumption was seen as an ideology. And it's interesting that we have seen the rise of mass consumerism since the 1960s, isn't it? Would one have existed without the other? It's an interesting question. Generation X consumes to reflect status, and so we have seen the rise of luxury and pseudo-luxury brands, the global expansion of car ownership, and of course electrical devices of all sorts. The millennials effectively rebelled against all this and spend more time and money on experiences rather than stuff. And now we have the rise of Generation Z. These are consumers born between 1996 and 2009. The oldest are now 23. These are the current school and university leavers who are entering the workforce, a workforce that they understand is going to be fundamentally different to what their parents and grandparents knew, a workforce that will have unimaginable opportunities and terrifying threats. And so Generation Z's core focus seems to be an ongoing quest for truth, as they define it. And this has three implications for consumption. Firstly, they see consumption as a vehicle for individual expression. Secondly, they value access rather than outright ownership. And lastly, they see consumption through an ethical prism. We'll come back to more information about Generation Z in a few minutes. For now, let's look at how the workforce will evolve over time. The UN forecasts that the 20-plus working age adult population will increase by 13.8% between 2020 and 2030. Importantly, this growth will coincide with a decline in the dependency ratio from 0.74 to 0.7. Although this is partly due to a reduction in the number of new children being born, it is a structural positive for South African consumption overall and for the retailers. simply because the fewer dependents each employed person has, the greater their disposable income will be. This does assume that we make some inroads into reducing unemployment, but Generation Z may be part of the solution, as I'll show you when we discuss some of the underlying beliefs. There will also be a change in the age profile of the workforce. This reflects South Africa's aging population. Employees under 30 will become a smaller part of the workforce, while the 50-pluses will increase their share. To show you these changes slightly differently, let's look at how the age groups will change in size. So we're currently in a situation where the number of new young adults leaving school is lower than it was in absolute terms 5 years ago. After 2020, this will start to turn around, and we'll see a small improvement in growth. But we will see the number of consumers aged 25 to 35 shrink in absolute terms relative to the previous 5 years for the next 10 years. In contrast, the numbers of consumers aged 40 plus will grow in double digits for the next 10 years. Here I've shown you the overall picture more simply and focused for the next 5 years, which is our real-life investment horizon. So, the number of young children under the age of 9 is going backwards, as is the number of adults aged 25 to 34. Yes, the two are absolutely related. We'll see good growth in the number of tweens and teens aged 10 to 19, with the 15 to 19 age group growing in double digits. The South African population is aging, and the number of consumers aged 40 plus will grow in double digits. So what does this mean for new household formation and the knock-on effect on food and durables consumption? According to Statistics South Africa, there were 16.7 million households in 2018, and in the past 15 years, households have grown at roughly double the pace of population growth. Now, however, I think the combination of a fall-off in terms of the number of new young people entering the workforce, plus the tough economy, means that fewer young people will be setting up their own homes. This is an obvious headwind to growth in durables like furniture, appliances, and cars. It has knock-on consequences for building materials if fewer new homes are being built. Okay, so that's the demographics underlying South Africa's consumer picture for the next 10 years. Now let's circle back to the generational change. So to be clear, this is a framework that will help us identify changes to the, for lack of a better word, Zeitgeist that forms a philosophical backdrop to how people think about money, possessions, and spending. Once we know that, we'll be able to figure out what consumption pattern changes are going to happen ahead of time. Like so many other things, this can seem as though it's coming through very slowly, and then suddenly it's a tsunami that's changing everything we took for granted. And importantly, these changes are going to play out differently in each retail category. Okay, so I'm going to pause for questions before we take a deeper dive into Generation Z. Are you saying that the number of new babies being born is reducing? Technically, it's not me, but yes, those are the forecasts. And factually, we have already seen this for the past few years. The number of new children being born is lower than it was 5 years ago. And it has some really interesting implications for baby-based and family-focused retailers, doesn't it? Does this Generation Z stuff have anything to do with South Africa? Absolutely, yes. The level of internet connectedness means that we are more globally influenced than we have ever been. Having said that, there are some important nuances which we will get to. So if you're asking if South African retailers can just cut and paste global retailers' communications and marketing messages, then the answer is no. Right, so we're now going to take a deep dive into Generation Z. So let's start off with the global picture. We're going to move through this very quickly. I have put some references in the last slide, so those are a good place to start if you're interested in doing some further reading on the topic. Firstly, Generation Z is important just because of its sheer scale. This year it will overtake the millennials to be the largest population generation globally, and by 2030 will account for 40% of the number of consumers in the world. Interestingly, despite the generations language often being used in developed markets, their numbers are highest in emerging markets. These are the children of older millennials and Generation X. Although there are some similarities to millennials in terms of thinking around ethical and sustainable consumption and experiences over stuff, they are very different to the millennials. Importantly, they seem to be shaping up to be entrepreneurial, whereas the millennials have favored employment. They are outspoken, and yes, I'm sure some of you with teenagers are nodding your heads. That means that they expect to have a say in household consumption, and one study estimates that they influence as much as 63% of household spend. Both globally and in South Africa, they see government-provided social safety nets as unsustainable, and so are beginning saving and investing early. That might be a product idea for some of the institutional investors listening today. And then we've all seen it. They have short attention spans. They demand to consume content in small chunks, often visually, and they try to do lots of different things at once. The most important differentiating factor about Generation Z is how they interact with digital devices and the internet. For them, there is no difference between the physical world and the digital one. For them, it's all real. It's not surprising because they grew up not just the internet, but broadband, saw their parents adopt always connected devices, starting with the BlackBerry, and the evolution of the cell phone to life manager rather than just a communication enabler. And so it's not surprising that they get withdrawal symptoms if they are separated from the internet. Their smartphone is usually their focus in terms of how they connect with and interact with the rest of the world, but they primarily use it for entertainment rather than for information. And because they expect seamless interaction with the internet, while moving beyond needing to be able to read or write to connect online, increasingly we're seeing voice recognition as a doorway to the internet, but some studies show that young people expect they will be able to use hand or even facial gestures in time. While people my age are uneasy about big data and how much businesses like Google and Facebook know about me, Generation Z is happy to give its information away in return for personalizations and predictions. And they expect the internet to become a bigger and bigger part of their lives, to wear it, to live in it. For them, the Internet of Things just can't happen quickly enough. Importantly, this is a generation that sees itself as having a purpose. They are hugely aware of environmental and social issues. They are very money aware. The focus on saving we've already mentioned is one aspect, but they're also very entrepreneurial. They've grown up with watching the evolution of Google and Facebook, from wacky ideas to massive businesses, and given how they see the internet as part of their world, there's no surprise that many look to the digital space. They are very open to learning. But interestingly, many seem to have less truck with the idea of formal qualifications. I guess this is partly due to the amazing availability of good and bad teaching online, but the cost of tertiary education and its inflexibility and potentially limited lifespan may also be part of this. They also don't see education as a one-off, but expect to learn for their lifetimes. And then because they seem to be analytical and exposed to so much information, they are highly skeptical about traditional leadership, especially politicians. The bottom line is that American Generation Z thinks Mark Zuckerberg is more important than Donald Trump, and they may just be right. One of the defining characteristics of Generation Z is its independence and what that means. They have little time for traditional notions of authority. Because they are their own people, they, like the millennials, value experiences over ownership. That doesn't mean that they don't have any interest in brands, just the opposite. They are extremely brand aware. But the brand they are most interested in is themselves. And so they are not brand loyal in the traditional sense. They are constantly testing everything they hear and see, and they value authenticity above all else. So let's look at this in the South African context. Here we often describe Generation Z as the born frees, the children who were born after democracy. They are absolutely plugged into the internet and connected with global influences. The promise that was inherent in the first democratic election is worked through into a distrust now of authority and especially politicians. They have felt betrayed by an education system that is not preparing them for the 21st century and feeling its direct impact in high youth unemployment levels. But positively, this is reinforcing the entrepreneurial mindset as we begin to see growth in South Africa's own youth YouTuber community. They are absolutely money savvy, and one of the interesting outcomes is that many don't expect to use debt to buy things like clothes or even furniture. Now, this may partly be due to the restrictions on new credit granting imposed by the National Credit Act, but nonetheless, it means that any retailer that sees credit as its only competitive advantage will have a tough time recruiting these customers. So what does this all mean for consumer-facing companies that want to appeal to Generation Z? Firstly, companies need to speak directly to them, preferably through social media. And South African companies need to do as many large global retailers are and become a proactive participant in developing a more ecologically sustainable and fairer world. And they need to communicate it loudly to those customers, not hide it in the integrated reporting scorecards. Plus, they need to remember that they are fighting for share of wallet from a consumer who turns every rand over twice and would rather invest than spend. Okay, so I'm going to stop here for questions. You're all very quiet today. Right, so just to recap, Generation Z is already a factor in South Africa's youth market and will become an increasingly important part of the consumer landscape. And by 2030, it will be the single largest generation in South Africa's adult market. And this has some important implications for how consumption will change. So the most important possibility is already in evidence in some places, and this is the move away from ownership to access. We're seeing an increased interest in renting stuff, cars, say hello Uber, furniture, and even clothes, rather than outright ownership. And if you think the idea of renting clothes is preposterous, there are listed companies in the US that specialize in the resale or rental of previously used clothes, like Poshmark, StockX, ThreadUp, Grailed, and The Real Real. Even H&M has an equity share in a clothing rental business. From a South African perspective, it's important to realize that the influence of global trends will differ depending on what we're talking about. They will be particularly pertinent for fashion, for health, and for fitness, but local flavors will likely continue to dominate in other areas, for example, food. Lastly, Generation Z is not partial to celebrity endorsements. They see influencers as more authentic and credible, and so many big brands are going to need to rethink their marketing strategies over time. Are there any more questions before we get into the meat and potatoes of how the retailers are positioned for this? Okay, let's move on then. The old AMP surveys had some really useful data about the retailers' customers by age group. This slide shows you the food retailers' customer base split by age group. Just to focus for a minute on the 25 to 34 age group, which will decline in absolute terms between 2020 and 2030. In food, Massmart's Cambridge Foods and Game Food Co. is most exposed to this market, while Woolworths is least exposed. And here's the same exercise for the clothing retailers. Unfortunately, I haven't been able to get the same information for all the durables plays. Identity is the chain that is most exposed to the 25 to 34 age group, and Truworths is most exposed at group level. Woolworths is least exposed. We're now going to take the demographic information and translate it into generational analysis. This visual shows you how the generational profile of South African customers has shifted and will continue to shift over time. Assuming that the historical age group customer profiles hold, this slide shows you how the retailers' customer bases will look on a generational basis in 2025. The first thing that jumps out from the slide is how the listed retailers neglect the elderly market, which is interesting given that South Africa's population is now aging. Most of the clothing retailers significantly over-index in serving the age groups that will be Generation Z by 2025, except Woolworths. This has profound implications for how the clothing retailers especially speak to their customers. Increasingly, social media done well will be vital, especially if your customers are mainly young women. Instagram remains the key channel for now, if you must choose just one, and over time I expect at least part of the advertising budget to shift to YouTube. Altogether, the food retailers have a more diversified customer base age-wise, and so are better positioned to grow in those age groups above 40, where population will increase. Having said that, any slowdown in new household formation will also impact food consumption at the margin. In both food and clothing, Woolworths appears to be best positioned in the parts of the market that will grow, but it is a play on Generation X and increasingly the millennials. If you're looking to play the Generation Z theme, then you need to look at Mr. Price, TFG, and to a degree Truworths. Truworths does face some structural headwinds. It is more exposed to the 25 to 34 age group, which will shrink in the next 5 years in absolute terms. Arguably, it also seems to be lagging its peers in embracing digital and social media. And although we haven't spoken a lot about durables, please remember that these will be overexposed to any slowdown in new household formation. So I hope this was helpful. Thank you so much for attending. Our next webinar presentation will look more closely at whether the department store is relevant in the 21st century, including some case studies. So please watch your inbox for your invite. And remember, Zoo One Retail Insights will also write bespoke reports for anyone who has a specific issue they would like investigated in more depth. Please email info@zoo1.com or kirsty.lassinger@zoo1.com if you would like to discuss commissioning one. Thank you again and have a great afternoon.